going to build off of the video from the other day, from Friday the 7th, right, leading into the week of the 10th. My analysis going forward and why I think we're bottoming out. We probably have bottomed out in all honesty. If I'm just being completely transparent, I do think that this is very reminiscent of just how a bottom builds out and how distribution builds out. Now this is kind of, obviously we'll have to see where the open is this week, right? We have Thursday CPI. We have Friday PPI, so there's some data sets that can really catalyze a potential move. But, like I said, Vantage flows for the month of November open up next week. We have end of the year and the beginning of the year flows in terms of the large index expiration in December, the re-leveraging effects from the funds at the end of the year, and the single stock OPEX or expiration, I guess, for January, right? That hold a lot of relevance to the movement and the lack of volatility that you'll see in terms of the broader equity market, and then the lack of participation from individuals during the holiday season is very pivotal as well. And all this leads to, I'm not necessarily going to say that we push like 750, 800, but all of this can lead to a very sticky market in terms of the indexes and a lot of dispersion between individual constituents. And it's going to be very reminiscent, in my opinion, of how this range built out last Q4, post-election specifically, because you see the distribution build out, you see the footprint on December 18th, the expiration in the Fed meeting, you see the election gap absorbed into March, you see the higher highs exhausted, you see the dominoes start to fall with the semiconductors in the DeepSeek gap. And that's what we're seeing right now, right? We're seeing the kind of breakdown print on the 10th. We're seeing a, absorption of the demand or supply within that footprint candle, breakaway with exhaustion gaps, a nice and easy sell that moves like butter with like a lower high after this kind of exhaustion develops, with QQQ being the better short. And all of this into a breakdown, taking out some weekly lows, sleeping some pivotal ranges, and then a nice little volume climax to be put in on Friday's session, or a very strong close above the overnight gap, right? And so that's just going to be very pivotal, especially when you see a big spike on the VIX. You're going to see a lot of people get very bearish off of this sequence when there was a really nice short within this range down to the 618 spot, coming into and off of the overnight or new week opening gap this week. Just like the bear flag, the gap up being failed within an overnight gap from the 30th on those earnings reports. And then you see the bleed. I mean, the short is nice, but I don't even really care about catching this. We sweep the weekly lows. We're going to see a lot of people kind of get trapped, in my opinion, trying to short the hole here, and that's going to result in a reversion. Like I said, the data set's going to very high probability for those to kind of catalyze a reversal, or maybe a pop into like a higher low that we can then take into the 631 spot, right? That'll be a top wash for the week. In terms of QQQ being a very good short, but it's all kind of aligning, right? And just the ease of this sell. I mean, we shred 6% in 7 trading sessions. You're going to see a lot of people get very fearful and not necessarily understand the broader contextual theme of how this movement time period is, right? It's a product of time, not price. Said it before in April, and we all know what happened then, right? So that's kind of how I'm envisioning this panning out, right? That's kind of how I envision this developing. I think you're seeing like the meta chart really be a good long on like meta leveraged ETF, right? We're seeing the volume dry up, and then a nice little anomaly on this wick from Friday's session, directly off of the gap in the 618 from May 12th, right? Very pivotal things happening. And you have the NVIDIA chart. This is a reclaim of the July highs at 183 that were absorbed, broken. We saw a pop and an exhaustion subsequently follow that, and then we see the breakdown and a nice little influx of volume on a nice green to red closure. So that stuff is very important to me. Not a lot of any other names that really pan or catch my eye. I mean, Microsoft sweeping the lows from September would be pretty important. Amazon reclaiming the highs from February of 2025, right? We have Bitcoin. Like, a lot of people are very fearful on the Bitcoin aspect of things right now, and I don't think that's really the right time to be bearish, personally. Like, we have coin doesn't really look bad as well. So, you can't be short focused here. I do like XLP soon, the third low occurring under the January and then April lows, an influx of volume as well. When you see a 3.5% decline on the week with 74.83 million volume, followed up by a 0.5% gain with 8 million volume more, 7.7 million volume increase, right? Like that's a big, big notable thing to kind of understand there, right? In terms of just where the money's coming in and the development of these candles as well within this range on XLP is very appealing to me. We have like a notable exhaustion from the seller that we had this capitulation on the 29th, and then those lows being taken out. There's a lot that happens underneath these lows, like I've discussed, in terms of the change of hands, the collection of inventory. But overall, I really do like UNH still. This is a really good chart. I think you see the distribution on a daily perspective develop within the May gap. But now we're kind of starting to see that buyer show his hand again, and I would like maybe a little bit lower, ideally a little bit lower. I'll have to see how this develops, but no options trades, just a commons, maybe a leveraged ETF position. Nike, $60 is going to be pretty big for me in terms of whether this chart is going to be a continued long focus of mine, right? We didn't really get the spark off of the July gap or June gap that I wanted, but I do think that this can still be a good long, just the broader context of this chart. Board looks phenomenal. We've now had 2 direct inside weeks following the pop on the earnings report. I wouldn't necessarily long this on options yet. I would either want a sweep of this and then a higher low, or just like a nice higher low to be put in, like off of 1370 or 1367. Oh my god. Snap, I still do like Snap. This is a really nice weekly closure off of the earnings prop on Thursday. Just a commons focus for me. Path looks phenomenal as well. Just a commons focus for me. I mean, we get this really nice pop, the highest month of weekly volume of all time. Coming off of the 2022 lows, being swept with very minimal progression from sellers and then reclaimed, right? This is the climax put in on May. A secondary low established. Sweep those lows in August, fail within this bear gap. Take those out in March and April. See a pop, see a higher low in the test / reclaim of this previous support that was established 3 years ago. And then a really clean follow through occur after that, right? And then now 4 weeks of inside bar action, the fill of some of these gaps. This is a really appealing chart that I would probably want to take back to $20 on commons. If I'm being honest, CRM is kind of a mid name. I don't like it that much. LLY, beautiful options trade off the earnings flush, beautiful commons trade off the test and the last point of support in the gap from the May earnings report. I think this pushes a little bit higher. Now, no options trades quite yet for me though. A last point of support, secondary last point of support occurring off of 900 would be clean as well. I like Metalongs. I like UPS commons. It's just like a side focus of mine. XYZ looks pretty nice, if I'm going to be completely honest, in terms of this earnings gap. Potentially putting in a higher low here. This is not a position I'd really be focused on, but a side watch for sure. And I mean, for me, that's really it. These are my main long focuses. A lot of commons long focuses still. Like I said, that's the environment we've been in for like the past 6 months. With a handful of leverage trades here and there. But just really being patient on it, right? Now, I will say a lot of growth names kind of look pretty constructive. Like I said, the XYZ. DraftKings with a really nice anomaly on the earnings report, taking out the August 2024 lows into the discounted higher low range from 2022 lows to 2024 highs, 2025 highs. This is not a bad looking chart. Nothing I would touch on the majority of these quite yet, right? Except for Path. I really like Path, but nothing I would necessarily be like super confident in quite yet on a lot of these names, but they're definitely kind of piquing my attention. The Rivian chart reclaiming the May lows is pretty important as well. This is a really nice pop on a really consolidated chart here. If you just pay attention, but a notable bottom feeder with a lack of objective risk to reward for me to personally like be a focus, have this be a focus of mine. I think Palantir is continuing to build out of the range, Hood continuing to build out of range, but we have to be patient here, right? So honestly, that's pretty much it, right? It doesn't really change much. I just want to say that I think we have bottomed out most likely based on how this candle and the sequence and structure overall just looks. Maybe an in-wog to continue that climax and trap a lot of those late shorts, but also those early longs over the weekend. Now, I will say the market does not often bottom on Friday, so an in-wog would be ideal, like a new week opening gap into if we can see some continuation a little bit lower. I mean, I don't know where my ideal target would be. I wouldn't really want like a 2% gap down. Maybe just like a little bit of a trap into like higher low range. Um, like that would be kind of clean. Like a 0.5% to 1% gap down, and maybe just a bleed into data. That would be an ideal kind of scenario in my opinion. But other than that, maybe a pop into this gap from Tuesday and a higher low, and you can long this to potentially new highs. I think we probably hit 7,000 within this, but I don't think it's going to be a constructive hit of 7,000, right? Like when we see this, it's going to be things like this, like legs lower. This is just going to be for the next couple weeks, maybe a couple months. Legs lower, um, late shorts trapped, constructive opportunities to long, exhaustive pops, breakdowns to either take out those lows or find a higher low, rinse and repeat. Long a lot of leveraged or long a lot of underperforming names until we get a clear constructive short opportunity, right? Nvidia's Nvidia is something I'm focusing on as well, but this will probably give you a nice pop off of the report in all honesty. So that's pretty much it, honestly. Pretty much it.